Our local monetary policy authorities, the central bank, and our fiscal authorities have a very similar problem to deal with as do their counterparts around the world. Other major global economies trying to get growth going in their economies, trying to keep inflation in check, and that's a very similar situation that we have here. Trying to get growth going, trying to keep inflation in check. While they're doing that, they have to enact their monetary policy, their fiscal policy. And again, we have a lot of similarities in the local situation and the global situation. Interest rates are at historically low levels. Our rates haven't been this low for 30 odd years. Globally, the central banks have pushed interest rates to near zero levels, and in trying to do that, they've run out of road on the monetary policy side. What they've had to do then is big asset buying programs, buying bonds, buying any kind of assets in the markets, trying to put liquidity, cash into the system to try and stimulate and get demand going. On the other side of the equation, then, we've got fiscal policy, where many of the governments, the national treasuries, have been running big budget deficits. That means they've had to borrow money because they've been spending more than they've been getting in. Now, around Europe particularly, and many of these other economies, we're trying to cut back on that, trying to balance the books a bit better. And in doing that, that's kind of restrictive on these economies. So you've got fiscal policy where you want to put in these austerity measures, try and cut back a bit. But on the other side, you're trying to stimulate demand with monetary policy. And so this is the fine balancing act that our monetary policy and fiscal authorities have to deal with locally and abroad.